The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to start out the day like we usually do, looking at the German DAX. As you can see here, we completed a Gartley sell pattern here today. We're seeing pretty much the same thing in the Dow Jones pattern and also in the E-mini S&P and also especially in the New York Stock Exchange Index. I covered those exclusively in the newsletter, of course. Now, the NASDAQ today, just a little while ago, hit a perfect 78% retracement of the whole move up there at 76, 71, I guess, whatever it was. 71 was the last part of the handle. So keep an eye on that because that was an exact number. Last time I checked, it was trading at around 67. Now, if we take a look here at the FTSE, you're going to see the same thing. You're going to see a ABCD Gartley sell pattern. Now, the FTSE is under a lot of news because the news from Great Britain is that the Theresa May's political party is in deep trouble. We've heard this in just about every country at different times. The British pound is saying, I don't care about her troubles. The British pound is rallying strongly. So, and at least it was a little while ago, so that the market is not actually following. People have asked me a question about the trade tariffs, folks. I know about as little as that as anybody else. We've never had anything like this in a very, very long time. Actually, some of these numbers that they talk about, like 34 billion and 100 billion, when you've got $1 trillion economy or $2 trillion economy like we have with the UK, with the United States and China, those are rounding errors. You know, that's really, you know, not very much. Now, the $64 question is, have we reached a bottom here in these grain markets? I believe that we've had a pretty good chance here in the corn because that support down there at that 350 a bushel was a very strong higher bottoms on the long-term monthly chart with a nice 135 pattern. What I would be looking for now is we had a 40-some cent rally in the beans, which is not very much considering that it dropped $2, a little over $2 and a half, $2.20 a bushel. So you have to watch to see what the pattern is going to unfold here. We're down a little bit today in beans after the big rally on Friday, but that's just normal. So I would just kind of wait for the pattern to unfold. That's basically it. As far as the tariffs, you know, things are going to happen, and you know, you don't know what's going to happen. Now, this could be a situation. Rich Anderson mentioned it to us when he was on the show last week. It could be, you know, you buy the rumor and sell the fact, you know, and so we'll see if that's going to be the case. But you know, there is a possibility of these trade wars accentuating. But you know, there's something else out there. If the stock markets across the world, and they all have rallied with the exception of the emerging markets and Shanghai, the Chinese markets, the rest of the markets have held up relatively well. So maybe they see something out there that is not there. Now, there's games being played behind the scenes, particularly something between maybe Korea and China. And, you know, they're always playing games like that. But that's reflected in the market. That's why being a technician is the best way to look at things, because if prices are going up, there's more buyers. If prices are going down, there's more sellers. I've been asked to take a look at a stock that's in the news quite a bit. We haven't looked at this for a very, very long time. This is the stock of Starbucks. We'll just look at this over the last 6 years. You'll see that we had that big ABCD pattern. We were looking for 66 weeks up. It actually went 68 weeks, and then it corrected 20%. It went from 60 all the way down to 42, stopping almost exactly at the 61% retracement. From then, we went up and made new highs into 2017. But where we are right now is very interesting here in Starbucks, because you'll notice that we've had a beautiful ABCD pattern form here about 2 weeks ago down there at that 48, what's actually about 47.50 per share. We're trading around 49.23, so that's probably a bottom, folks. That's right at a 78% retracement off the low of 2015. It's a 382 retracement off the low that we made back in 2012, and that's an ABCD correction. So, and it's in the news. It's certainly getting a lot of bad press lately, but that is an ABCD correction. The other thing that's interesting is that it equals that $20 a break that we had during 2015. We went from 60 down to 42. This time we went from 64, to 44 or 46. So really close to the same amount of money on the downside. So this is a very oversold stock that is due to rally. And we'll see if it will or not, but that's pretty much what it looks like. We'll see what that's going. Now, Shanghai was up quite a bit last night, as was Hong Kong. Hong Kong had a huge rally, and they were bringing out a new IPO on a telephone company, and they were really setting that thing up to fail. Every news item coming out was it was overpriced, and it hung around break even all day long, and then finally sold off on the close to be down just a little bit. But boy, they were really forcing that stock down in the news based on Bloomberg. I don't usually watch Bloomberg, but we were involved in watching the recovery from the boys in Thailand coming out of that cave. Was really, very, very great human interest stories. We were watching that, and then they were talking about this telephone company, and they just kept hammering it with bad news. And it did close down just very slightly from its initial price, but where it goes from here remains to be seen. Now, the next stock that we've been asked to take a look at, of course, is Tesla. We've had a pretty big run up in Tesla. We got up to above the 78% level. I think we posted that a week or so ago. We now completed an ABCD pattern down here at this 295 level. We're trading around, I think, 310 this morning. So bottom is probably put in here on Tesla, and we'll probably get some type of a rally from this level. How much it's going to be, we'll have to wait and see. Remember, folks, we have Norm Winsky is going to be our guest this week. We have a solar eclipse, a new moon coming in here on the 11th, which is Thursday, and then 2 weeks later, we're going to have the lunar eclipse and full moon, and that's on Friday, the 27th of July. So all of those will be, very, very interesting, to watch. But we'll have Norm on, and he's going to give us some key times the day before, like he usually does. So we'll watch those. They've been actually doing pretty good, better than 70% for short-term moves, but they're still actively working, and that's the main thing that we want to be keeping an eye on. Now, we had one other stock that we want to talk about, and that is Twitter. If you remember, a couple of months ago, we had our good friend Al Larson on the program, and he had a very, very bullish cycle forecast for Twitter. As you can see here in Twitter, we have this huge ABCD pattern from 12 all the way up to 37, and a 382 retracement down to 26. That finishes up here right around 49, and we're at 47 today. So keep an eye on that one. But the key thing about Twitter, we're going to cover that when we come back from the break, because this is something that we really need to pay attention to. We'll be right back. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of the Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find the Path of Least Resistance under Trading Newsletters.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we're talking about Twitter, and I wanted to point out something. This is a daily chart of Twitter, but I would like for you to notice the typing that I have there where it says this is important, a gap above the 78% level. This is a failed pattern, folks, and it's so important because when you gap above these numbers, like 78% or 1.618 or 61%, that is almost a given that it is ready to run. And if it gaps like that, gaps are unknowns. And so that makes it really difficult to fade that, and you certainly don't want to stand in front of it. That's why you put a stop in, because you don't know when these patterns fail. No one knows that. It's all based on probability. One of the things that Mark Douglas worked on when he was doing his book here, Trading in the Zone, here in our office in Tucson, we shared it for a couple of years while he was writing that book. You know, he interviewed a lot of different traders that would come in to visit us to do the book. And the one thing that that Mark really followed closely was the fact that people, for some reason, they focus on their failures about twice as much as they do on their successes. In other words, a previous failed pattern or a previous bad trade, they focus on that, you know, more than they do you know, what's going to be happening in the future. Now, the difference between a neophyte, someone just starting trading, and a professional trader, the professional traders, they have the ability, the trait, in order to shake off that and just move on to the next trade. That's the main difference that Mark found when he was doing that. So remember, don't focus on these losses. Focus on your successes, and you'll be, you know, far better off. It's much like if you have a child, a 5-year-old, you're teaching him how to ride, he or her how to ride a bike, and if the if the child falls over, you don't say, "God, you're clumsy." No, you just, give him a little bit of encouragement, put a little Band-Aid and iodine on it, and push him up into the the next group. So my youngest daughter, Lauren, when she started to ride a bike, she would not take any help. She would put her foot on the curb and just try to roll off. She wouldn't let you push behind her to guide her or anything like that. And she kept falling down, and she had scrapes and bruises. And about 2 hours later, she was spinning around that cul-de-sac, 20 miles an hour, pride as a peacock, and never even cried about any of the bruises she had. She did it all herself, and that's how she's been her whole life. She's done it all as a self-starter, and so that's what happens. You just go on and do the next one. That's the main thing that you want to be, taking a look at the different things. Now, folks, one of the things I do want to mention, a couple of really important things, and one of them was one of the things that I focused very heavily on in the newsletter this week was the situation in copper. This was just an absolutely an incredible opportunity we felt in copper. We talked about it on the show here last week. We were right down at that old high from February of 2017 at 279 a pound in copper. That was a 61% retracement of the low from April of 2018, of 2017, and that also happened to be the 382 from the absolute low that we made way back in 2015. So we're looking at a potential here of a 30-cent rally in copper, and it's already rallied 8 cents the first day. We've also saw the same situation in the gold and also the same situation in silver. Gold has rallied just about $30 an ounce in 2 days. So watch gold. It should have some pretty strong support down around the 1258 level. That would be a 382 retracement of this recent move. So sort of keep an eye on that. But it'll be very, very interesting to see whether these things continue on or not. Now, I did want to bring the chart up of the NASDAQ. I don't know if this high that we made early this morning is going to mean very much at all, but we did hit that exact 78% retracement. We got up to 72.71. And so we clear 72.90, then it's probably going to go a lot higher. But the NASDAQ is leading the pack. There's no question about that. If you look at the relationship between the New York Stock Exchange, and I'll just bring this up here to let you folks take a look at it. If you look at the relationship between the New York Stock Exchange and the NASDAQ, this is a tale of two markets, folks. One's in a bear market, and the other one's in a bull market. The NASDAQ just made that 78% retracement this morning, and we're probably going to be right up near the 61% retracement again in the New York Stock Exchange Index, but it's not even close to the June highs. So there's a big difference in these markets. And remember, the NASDAQ is basically, it's about 20 stocks out of the 100, those big ones. And when look at Facebook, how bullish it is, folks. I mean, it had a really big move on Friday with a really strong close into new high ground, and it's up again today. You can't fade that. There's no pattern in the world that allows you to go short that, because you have no way of even predicting what the upside is going to be on that. And that's the whole key to pattern recognition, is to keep your losses as small as you possibly can. And that's what pattern recognition is all about. When Dr. Andrew Lowe wrote his book, The Non-Random Walk Down Wall Street, the one thing he did mention, very emphatically, that these patterns are far from perfect, but they do have a high probability of repeating over and over again in the same manner, and that in itself made them valuable. But like he mentioned, it's just a probability. It's not a certainty. So you've got to be protecting yourself, for whatever reason, is because if you don't protect yourself, you're telling the market that I know more than you, Mr. Market, and that's never going to be the case, because men are often wrong. Markets are seldom wrong. So sort of pay attention to that. That's what's interesting. Now, I've had another question about what's going on in the UK. Again, that political stuff is so far above my pay grade, folks. I'm just a technician. I look at the charts. It surprised me today with the thing with Theresa May's in trouble as far as her party, and yet the pound has a strong rally. I mean, the only way you can say that is it was oversold and people wanted to buy it, or there could be something else into the mix here, that they wanted to get rid of the guy. Who knows? There's so many things that goes on behind the news on these things you don't really know, and that's why being technician, at least from my perspective, is the easiest way to look at it, because if prices are going up, there's more buyers. If prices are going down, there's pretty much, more sellers. That's pretty much it. Yes, the Brexit secretary resigned. His name was Davis, and whether that means anything, they find somebody to replace him, just like they do here. It's always and our politics here in the United States are so bizarre that it's it should be a lesson in how not to do things, but we'll have to wait and see. As far as the tariffs, I've mentioned several times, we really don't know the ramifications, and the amount of money that you're talking about on some of these. I know it's in the billions, but when you're talking about $trillion economies, those are rounding errors, folks. And we have not been treated fairly by some of these things. You can see what in NATO, we basically pay for NATO. And our trade with China has been one way for many, many years, and especially with intellectual property and stuff. So maybe this is all going to come out good down the road. The stock market certainly says that it's not interested in this. I mean, it doesn't seem to be interested in anything else, so keeps wanting to go higher. So we'll pay attention and see what's going on. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I've posted a chart of the Hong Kong index, the Hang Seng index. I wanted you to see a couple of things. One is, we have this big ABCD that's pretty much close to, it came within 1% of the exact number. It made the 1.27 expansion down there at 27,900, and we've had a really strong rally last night. We rallied over 2.5%. Over 400 and some points in the Hang Seng. But the key to look at on this chart from our perspective is if you'll look at the line there where the market broke down from, which was around the 30,000 level, that's very similar to what we were looking at in Twitter, where the market gaps below those 78% levels, or it could have been 0.618, or on the upside it could have been above 127 or 1.618. When it gaps above those, folks, that's really telling it there's a change in economic thought, and things are probably going to be moving, in that direction. We saw the same thing happen in the soybean market right after the heat broke. Right after Memorial Day weekend, and then shortly thereafter, about a week after, the tariffs came in, and we saw soybeans drop, better than $2 a bushel. Now, these could easily come back. The weather's hot, but they're not going to come back overnight. As you can see, we're selling off a little bit this morning, but watch the sell-off, because you might get a nice place to pull back and find a really good spot to be a buyer. In fact, corn is self-correcting. December corn is self-correcting. It's already made a 61% retracement off of the high that it made on Friday. So these markets are not acting nearly as bearish as they were before. And here we are in the midst of the trade war. At least that's what they're telling us. And believe me, I don't believe what they're telling us most of the time, because for two reasons. One, I don't understand it, and the second thing, I just don't trust them. So we'll see what happens with these as we go through here, looking at some of these. Now the bonds, we've been talking about them as far as getting ready to sell off, and we certainly had a good reason for it this past week. We had a really nice rally. Let's get this up here so we can take a look at it here in the Treasury bonds. And we're down about a full handle from that level, from 146 down to 145. And remember, this thing has been rallying since May the 17th, so we rallied just about 6 weeks. And so that would tell us that we're most probably getting ready to see interest rates start to rise again. Whether that'll have a bigger effect on some of these other markets or not, remains to be seen. So we'll just pay attention. I wanted to mention just a little bit about platinum here, because for two reasons. One is a hat tip to our good friend Steve Rhodes, because he's the master of the hammer and shooting star patterns, and we certainly had a hammer bottom in the platinum. We took out the lows of platinum from 2 years ago. The old low had been 810 per ounce, and we got down to $800 an ounce on this last run. We went $10 below. That happened to be a perfect 1.618 expansion of the low from last December. And it's also, if you look at the ABCD structure on this, the CD leg is 1.618 of the AB leg, but it also measures down to that $800 per ounce level. And we've had one heck of a rally. We've rallied well over $65 an ounce in 2 days. In fact, less than 2 days. And so this is going to be an indication that we need to watch what the pullback is going to be here in the gold, the silver, and the platinum. Because remember, we had Bill Meridian on last week, I believe on Monday, and he talked to us about the possibilities for strong cyclical buy patterns during July, August, and September in the gold and silver market. So that's something that could be happening now. We've rallied just about $30 an ounce off the bottom that we made last Thursday, so that's a pretty good indication of what's going to happen. Another question's come up this morning about the eclipses, folks. They're very powerful. We got the new moon eclipse on the 11th. We got the full moon lunar eclipse. The solar eclipse on the 11th, the lunar eclipse on the 27th. So we'll watch those. We will certainly have our friend Norm Winsky on to talk to us about that, because he gives us a good indication of these days within a plus or minus 1 day, and his intraday stuff has been very accurate too, so we need to watch it closely as we go through and look at some of these things as we watch. So, someone asked me a question, am I making a buy recommendation in Starbucks? I'm not making a buy recommendation in Starbucks. I'm just suggesting that this pattern is complete down there at $47 a share. It shouldn't get below that. You got a major AB. Well, let's just take a look at it again, because it's as clear as anything you can look at technically, because you're right at a 78% level when you were at 47.37, and that was off the low that we made back in 2015. So, you know, if you're looking to buy something, I mean, this is a beautiful ABCD pattern. We haven't had an ABCD pattern since November of 2016, which was what the election, that when it took it up to new high ground. So this is the first really significant one we've had in several years. That's all it is. I don't know if it's going to hold or not, but it's just a pattern that, excuse me, that lines up, you know, looking at something that looks like, you know, pretty interesting. Now, I wanted to talk just a second about one other chart that looks real interesting, and that is the soybean oil on the monthly chart. This is another one that looks really interesting, because we are down now at the 78% level of the lows that we made in 2015. And if you'll notice this pattern that we have here on this monthly chart, that is a Gartley pattern in the soybean oil. So one of the things that we're focusing on is to watch for a good low-risk entry in soybean oil here, because this is a Gartley pattern. We're having a higher bottom than 2015, and at you know, we got this low below, a little below $28 a pound here, and I think that we're getting ready to have a pretty good bottom here, you know, in this soybean complex, particularly in soybean oil. That's the one that has the clearest pattern. The meal has an interesting pattern, but it's not nearly as clear as we see in the soybean oil. The soybean oil one is just you know, really, really interesting. So just we'll watch that very, very closely. Now, someone's asked a question about the crude oil. I'll bring this chart up. This is a monthly chart in crude. You can see it on a little bit bigger time frame here. You'll notice that we're completing a big ABCD pattern up there at that 74.40 level. We're trading around 70 and change so far. So that tells us that maybe that top is in. That high that we made last night in the crude oil at that 74, let's see, what was it? No, 72, no, 74.14, I believe, was right at the 78% level of that whole thing. So that's another one that you might want to watch. And there's a big divergence in the crude oil complex. The gasoline is not making anywhere near strong retracements like we're seeing in crude oil at 78%. We're barely at 61% retracement in gasoline. And the same thing is true in the heating oil market. Both of those are showing you that there is some pretty good resistance here. I'll bring up the heating oil because that's the easiest one to see on a quick basis. You'll be able to see that the even though we went to the 78% level in the crude oil, you'll notice that heating oil has only been able to make the 61% retracement and then sold off quite a bit. So this is the weaker of the whole complex. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, folks, I posted a chart here of this U.S. oil on a 30-minute chart. You'll see here that we have some lower tops in here. That is basically a perfect 135 pattern from the highs. It's just lined up just beautifully. Your risk here is above the 74.25 level. So this is what we were talking about, the divergence. Now, if you look at this really closely, you'll notice here on the 8th, last Friday, we had a beautiful ABCD structure on the downside that stopped exactly at the ABCD level of 72.20. We immediately rallied $2,000 a contract up to that 74. Now, whether this pattern is going to complete or not, we don't know. But the whole secret to this is this pattern has really lined up risk control in just a beautiful way, because if it gets above 74.30, there is certainly something wrong with this pattern. So far, it stopped exactly, where it was supposed to be. So we'll keep an eye on that. That's one that does look interesting, because we do have a divergence between the gasoline futures and the heating oil futures that are also telling us. And we made some pretty significant, as we saw in the long-term ABCD structure on the crude oil, we made some really big ABCD patterns there on the long-term weekly charts in this, because we've gone from 40 to $74 a barrel. That's a huge amount. And whether that's going to continue or not, remains to be seen. And again, it's all in the political realm of, job owning and trying to get prices down and stop like that. So let's just watch it, because it's going to be interesting here in all of these things. And whether they're related to these relationships with the tariffs or not, I am not sure. But you know what, folks? Nobody else is either. That's the whole key, to taking a look at it. Now, one of the other ones that I wanted to mention here that is in severe trouble as far as a currency here is the, you'll notice here that we have the Canadian dollar. We went up to that 78% level, up at that 173.90. We hit that thing twice within 2 ticks, and now we backed off, and it looks like we're a little lower today. We're coming down into that 130 level, and it looks like we're heading down to that 128.70 level in that. So we'll watch it very, very closely if we get to that level, because this is a longer term. We have a weekly pattern that says this thing could go to 111, but we've had one heck of a rally over the last 5 months in this. Whether this stops it up here at this 133 and change level So far it has, but we'll have to wait and see what's going on. Yes, we're having a lot of volatility and stuff in the grains, and we'll probably continue that because these markets, when someone mentions the T word, tariff, you know, beans could sell off 15 to 20 cents. But this is the kind of action that you like to see if you're a pattern recognition trader, because, you know, just wait for the pattern to unfold. I don't see any pattern in the beans right now. We had the nice bottom. We rallied 40 cents. So watch the retracements. You know, 40 cents, you know, should give you, you know, a pretty good retracement of at least 12 to 14 cents, which we've already gotten. We've already gone through the 382 level. So that probably means you could see a full 28-cent retracement, which is nothing more than a 61% retracement. And remember, we've got this solar eclipse and new moon coming in on Thursday, which could be Wednesday, but watch that. That's the one that I'm waiting for. I'm waiting to see how that one lines up, to see how we're going, you know, see it with, and then we'll, okay, let's just 1 second. I have to, just 1 second, folks. I have to answer Cy. He is in transit, and I wanted to check with him on something because he has a couple of positions that are working, and he just wanted to make sure that they were still in the right place. But what we'll be watching for here in the grains, watch that soybean oil, folks. That's the one that to me looks like it's the real easiest one. It's got a really beautiful long-term Gartley bullish pattern. The level has already been in because we went below $28 a pound in the Christmas oil. So watch to buy soybean oil. That's the one that's the lowest risk. It's got the best pattern. The second one, of course, would be Christmas corn. That's in December corn. That's another one that looks real interesting. So those are the ones that I'm focusing on right now. The wheat is really not involved in the tariffs and stuff, but they could be down the road. But we'll wait and see what's happening. Another question someone's asked about the weather. You know, the weather is hot, but if you've got rain, you've got the greenhouse effect. So if you got hot weather and a lot of rain, that's actually a good thing. You get hot weather with no rain, that's not a good thing. So we'll keep a look at that. We'll be able to see that. Yes, we are definitely going higher in the markets here. We've exceeded that 78% level in the NASDAQ now by about 8 points. We'll be watching that very, very closely. Let's just take a quick look here at soybeans. We're down now about 25 cents from the highs that we made on Friday, and the 61% retracement here in the beans that we're looking at. This would be nearby beans, would be down another 10 cents. That would be down around, well, not quite 10, about 8 cents lower would be the area. That would be down 28 cents from the high. So if you're interested in that, I would take a, you know, keep an eye on that. But frankly, I would wait for the pattern to unfold, you know, the way you'd like to see it. That's primarily the main thing that I would be watching. Watch for the correction in the gold market, folks, because if we get a pullback into that 1259 level, I believe that's going to be a pretty good buying opportunity in the gold. We've already seen it in copper. The silver looks interesting. Platinum, we've already shown that it's certainly got a lot of things going for it from the long side with that hammer bottom. So all of that tells us these metals are most probably getting ready to have a substantial rally. Related to the tariffs or not, God only knows, and she's not trading, so not to worry. Let's take a quick look here before we come up to the next break at the U.S. dollar index, because it's at such a critical level here. We're a little bit lower. We're right at major support down here in this U.S. dollar. We'll take a look at it here. That's 93.50 level is going to be very, very important, because if it breaks that, that's going to confirm that double top that we were talking about a couple of weeks ago when we got up to that 95 level. We had that huge move, if you remember, back on June 14th, and then the market backed off and then, you know, messed around all the way up to that double top there that matched the one from October of last year. So if this goes below that 93.30 level on a closing basis, this is telling us that the euro is most probably going to be, you know, approaching that 119 level one more time. So these are all at relatively critical levels as we come into these big cycles that we're having. It's not just the eclipse cycles, folks. There's some other stuff that is very, very interesting that makes it look pretty good. Yeah, hold on 1 second here. I got to check with that. Okay. Okay. Trying to do two things at once, folks. Can't do it, so let's just move on to cover this. But if you had to do anything, just 1 second. I got to put an order in. Just got to take care of business. 1 second. What? Okay. There we go. That's about it. That's the main thing that I wanted to get through here. We have to watch these things, but the metals look very, very positive from a technical basis. We haven't. Today could be positive for the grains too, because if we pull down to these levels and then they turn, that's going to be a very important thing to look at. But if you had to do anything, and you're not forced to buy soybean oil, December soybean oil, because it's got a Gartley on the long-term monthly. And even in the face of tariffs, they still got to eat. 877-927-6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I've been coerced into putting in the chart for the November soybeans. This is a 30-minute chart. This is what we're looking at here, a potential ABCD structure. Remember, this is a 30-minute chart, so pay attention that it's a short term. But there is a Gartley pattern forming here about 6 cents lower, down around that 869 level in November beans. The risk on this would be around 10 cents, so you become a farmer for $500. But that is a Gartley pattern. We're having a sharp move down, which is related to more tariff information, of course, but pay attention that there is a very, very distinct Gartley pattern at that point. So that's what I would be watching to see what's going on. Anyway, let's see how we're going to be moving here this morning, and we'll be able to get a rough idea of where this market is going. Remember that the overall market, we've now broken, how much did we break? Broke 22 points from the NASDAQ already. So that fib point up there might mean something very, very important. So sort of pay attention to that. The Dow Jones, of course, is making new highs up at that level, and I'm not sure how close we are in that one. Let me double check this on the longer term basis here on the Dow. Well, this Dow Jones is not even moving at all. This thing is, it's just a, like as Basil would say, it's a bifurcated market. There's the NASDAQ and the Russell. We're at a 50% retracement right now in the Dow Jones Industrial from the high that we made back on the 13th of June. So pay attention to that one too. But the NASDAQ one is the real interesting one, because we hit that and broke quite a bit to the downside. Whether it's going to mean very much or not, we'll have to pay close attention to it. But things will be active. This week should be very, 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 very active. Yep, and that's what we'll be watching. Okay, let me do one other second here. We'll be right back. 877-927-6648.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks!